So August has been a bad month for NIO, but this might be about to change. While the stock initially dropped about 20% to a new 52-week low, the stock has recovered about 10% since then. So is it time to run or is it time to buy the dip? After all, there is some huge catalyst coming very soon for NIO, and this could be a massive inflection point for the company. And two analysts are now expecting NIO stock to double. This is a must-watch video for NIO investors where I look at the very latest NIO news, analyze NIO's financials and current trajectory, and compare these to the likes of Tesla before Tesla stock took off in 2020. If you're a NIO investor, then you need to watch this. But before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor. This is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it. So first I want to take a quick look at last week's NIO sales. NIO vehicle registrations in China were 3,300, down 43% from the 5,800 in the previous week. NIO delivered 20,498 vehicles in July, marking its third consecutive month above the 20,000 mark. That's up 0.18% from last year, although it's down 3% from 21,200 in June. But what's important here is that NIO has delivered over 20,000 units for 3 consecutive months. Prior to this, NIO had only broke above 20,000 once ever. Looking at this graph from last year, we can see that at the time NIO had never delivered more than 16,000 units in a month and was guiding for up to 25,000 in a whole quarter. Now they are doing close to this in 1 month, and even these figures are about to become a distant memory as sales figures might be about to go parabolic. That is, if NIO are able to keep up with the demand, and I will talk more about this in a moment. When we look at the charts, we can see that NIO has once again bounced off its 52-week low, and although we are unlikely to see any huge price movement over the next couple of weeks, there are some indications of a breakout move. There is now a crossover on the moving average, but there is also this huge wedge formation. The last time I seen the chart set up like this was back here in April, when NIO moved up over 60%. Of course, the stock has been dropping since then, but right now there is 2 major catalysts to come. First of these is the earnings report that is due in just a couple of weeks. But first, let's look at the current financials to see where we stand and compare this to where the likes of Tesla was many years ago, just before Tesla took off, and then I will look at the second major catalyst. So looking at NIO's balance sheet, we can see that they have total assets of $14.4 billion and total liabilities of $11 billion. Over the past 3 months, there has been a decrease to both assets and to liabilities as the company has burned through some cash, but have also reduced their trade payables and other liabilities, meaning the total shareholder equity remains about $3 billion. Looking at NIO's income statement shows us some very interesting figures. Firstly, revenue is actually down on the same period last year, with revenue having decreased from 10.6 down to 9.9 RMB. Now, as we know with a growth company like this, seeing revenue declining year over year is a very bad sign. However, there is some reasons for this, and it's not entirely NIO's fault, which I have talked about before. But there is a very big positive in these numbers too. Although revenue may have dropped about 5% year over year, the gross profit from that revenue has grown over 200%. We can see that here. Gross profit of 162 million on 10.6 billion in Q1 2023, but now a gross profit of 480 million on 9.9 billion RMB in Q1 2024. Now, for anyone who likes to look at the percentages, that means in Q1 last year, NIO's gross profit margin was just 1.5%, while it has now increased to 4.9%. NIO's gross profit on vehicle sales is actually about 9%, but this still lags behind its rivals, while its other sales of 1.5 billion RMB actually produce a loss. Now, I've been asked loads of times to compare NIO with Lucid, but there really is no comparisons. Lucid had revenue for Q1 of 172 million, and from that there is a gross loss of over 700 million in just a single quarter. So comparing NIO with its peers such as Xpeng and Li Auto gives a far more accurate comparison. Xpeng have achieved a gross profit of 15% on sales of 5.5 million RMB, while Li Auto have achieved a gross profit of over 19% on their revenue. And this highlights a couple of things to me. First of all, NIO is actually making a loss on its services and other sales. Now this should not be happening, but when you consider the amount of money that NIO is investing in its infrastructure, an argument could be made for this. Secondly, NIO's gross profit on its vehicles is improving, but it's still far too low. Gross profit might have increased 200% in a year, but at only 5%, it would need to increase another 200% just to get on a par with its rivals Xpeng and Li Auto. Even Tesla, back in the day when Tesla was operating around the same level as NIO is today, was achieving far greater gross profit margins. Back in 2017, Tesla was achieving about 12% gross margin and making heavy losses. But 2017 was a pivotal year for Tesla, because this was the beginning of sales beginning to skyrocket, and this is the exact same position as NIO might be in right now. But a few things could be holding NIO back. But before I talk about these, if you are enjoying this video and like my analysis and comparisons, then like the video and drop a comment below telling me what you think about NIO now in 2024. Now, one of the things that has been holding NIO back is the sales of its current range of premium cars. Right now, the first mass-produced onvo L60 has officially rolled off the production line, and the company has released a bunch of official interior images of the new model. The onvo L60 is set to directly compete with the Model Tesla Y and Model 3 while providing premium quality at a budget price. Just look at these photos. The onvo L60 interior truly looks beautiful, and yet this will be competing at a lower price than its rivals, potentially starting as low as $23,000 without the battery pack under the battery as a service subscription. The onvo L60 is set to be a game changer for NIO, with deliveries are expecting to begin in late September. The L60 vehicle apparently hit 60,000 incancellable pre-orders, providing a good indication of strong demand. This is going to be a major catalyst. Ultimately, the goal will be for the mass market brand to produce far higher sales than just 30,000 per month, which is the target of the premium brand. But the biggest issue for NIO is the path to profit. But NIO has a plan for this. NIO has struggled over the past few years to produce consistently growing gross margins, due in part to the volatile quarterly delivery numbers while building new brands, onvo and Firefly. The management team have set the following vehicle delivery targets for turning profitable. For NIO, 30,000 monthly deliveries at 20% gross margin, and for onvo, 20 to 30,000 monthly deliveries at 15% gross margin. As an example, the onvo L60 vehicle has a $30,000 pre-order price for a 4.5k gross profit. At 30,000 vehicles per month, NIO would generate approximately $405 million of gross profit from the onvo brand alone per quarter. So this begs the question, is NIO a buy or a sell at this price? Drop a comment below, I want to know what you think. Now, I know a lot of you have been holding NIO since 2021, and have average costs of maybe up near $30 and have long since given up on averaging down. But if you were new to NIO stock today with money in hand, would you buy NIO at this price? Leave a comment below and let me know what you think. In my opinion, this is NIO's Toyota moment, a true inflection point for the company. Just think of Toyota and Lexus. Which one of these do you think sells more? Lexus is the luxury division of Japanese automaker Toyota, one of the world's biggest car companies. But Toyota outsells Lexus by more than 10 to 1 because in reality there is more demand for the lower cost vehicle. So think of NIO. NIO is the luxury brand, onvo is the more affordable brand. We could easily see sales of onvo far outweigh sales of NIO, but this is just my thinking. Let me know what you think in the comments below. Now, analysts in general have been very bearish on NIO stock in 2024, but they have set price targets as low as $4 and as high as $16. The consensus price target of $7.55, which is more than 90% upside from the current price, and according to Citigroup analyst Jeff Chung, NIO stock could still double in 2024. According to Chung, NIO stock is a buy. Citigroup did, however, lower their recent expectations back in June from $10.40 down to $8.50. And the most recent price target is set by Bank of America, who gave NIO a $6 price target. Both of these are still far above the current price of only $3.90. As always, there's a lot of talk on social media about NIO, especially at the moment with the stock hovering above its 52-week low. But always do your own due diligence. Remember that I'm not a financial advisor and none of this is financial advice. But if you enjoyed this analysis, then please like and subscribe. Tell me your thoughts about whether or not you think that the onvo L60 will be successful on launch. And I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next